In today's video, I'm going to give you my forecasting outlook for gold in 2021, as well as a further projection outlook going into all the way up to 2025. So, in a previous vid that I made a few weeks ago, I talked about how I had created a channel to forecast gold's price. So, gold's price would always move in this channel between the red and green lines. And essentially, the red line was just a percentage of M1. It's 20% of M1. And the green line that captures the ceiling is basically where the money flows are going. So it's not just taking into account M1, but it's also taking into account the stock market in relation to the private sector economic growth and how overvalued or undervalued it is. So the more overvalued the stock market is to economic growth, the lower the price ceiling, because it tells you that the extra money that is being printed by the Fed is not going into precious metals, it's actually going into stocks. So, that's sort of the antithesis. It either goes into stocks or it goes into golds, and bonds is sort of the intermediary in between. Just to give you a frame of reference, many of you have noted that the bond market has dropped in the past few days. In terms of interest rates, the bond market, bond prices have gone up, but the bond interest rates have dropped. And I believe this is because investors are fleeing to safe havens, but they are not fleeing to gold, because gold is a hard asset. Once you buy gold, you buy it at a premium and you sell it at a discount. That is not an asset that you intend to reverse anytime soon. So if you buy a precious metal, your intention is to hold it for the long run. If you buy a bond, you can buy it, you can sell it on the market, you can turn that into cash, whatever. But a bond is sort of a more liquid investment. So I believe these investors, the reason why the gold price has not been pushing up lately is because these investors are buying a safer haven that they want to turn back into their original investment, because they believe that the problems in the economy are short-term in nature. That's going to melt away in the coming months, and I believe that is going to be very bullish for gold. Okay, so watch this channel very closely. So we'll go all the way up to the current day, and you can see how this channel here has tightened very much so during 2020 and 2021 with the COVID pandemic. And this tightening is going on with how bad the stock market has dropped, but how overvalued stocks have become. Okay, so they're very, very overvalued, which is keeping a tight lid on gold's price. Okay, so the money has been flowing into the stock market with the expectation that the economy is going to recover, but we're seeing the effects of new money coming into the system, and that is in higher prices, and eventually that's going to force up higher interest rates on bonds, which means bonds will be a no-go for a safe haven, which means the money will flow into gold. Now, this blue line here is my original gold valuation that takes into account the money supply measured by M1 and the consumer price index, and divide that against the gross private sector economy. You can see how that valuation has exploded since the wake of COVID. That tells you what gold's real value should be, roughly, okay? But the green line is telling you what gold's ceiling price will be because of where the money flows are going. This blue line kind of gives you an expectation of where gold's ceiling should lift to in the coming years. And indeed, as I'm going to show you in my projection outlook, I believe that's where it's going to go. But before I begin, just take note of here, okay? So this ceiling is very tight because of an overvalued stock market. I believe that's going to reverse in August, okay? So August is going to signal the peak of the stock market. We're going to have a little bit more of good news for stocks coming out with second quarter earnings and second quarter GDP. That's going to vanish in August, and then we're going to get hit with bad inflation numbers in the CPI, the PPI, the export price index, and the import prices, okay? So all of that is going to be inflationary. It's going to be forcing up because the Fed has been just printing an enormous amount of money. The government has been running records amounts of debts. It's been, going into records amounts of high spending. It's been trying to pass these infrastructure bills, so on and so forth. All of that is inflationary. It's going to force up prices. So it will start to weigh in on the stock market, I believe, in quarter 3 and then quarter 4, and it's going to cause a stock correction. So here's where we left off right here. Here's where we pick up here, okay? So let me walk you through where I think gold's going to go, okay? So gold will start off, pretty, here it is, and it's been trading around $1,800 an ounce, okay, ever since it corrected down from a peak at the end of 2020, and really about August of 2020, it hit a peak price, okay. I believe that what's going to happen is that in Q3 of 2021, the stock market is going to start to correct. First, the Wilshire 5000 will drop by, say, 5%, and then it's going to drop again by another 10%, and it's going to push up this gold ceiling, okay? So gold's ceiling price will increase. Now, some of this will flow into a higher gold price. So by the end of Q3 of this year, gold's price should probably be trading around 2,000. Okay, we're going to get a bump up in gold in Q3. Then in Q4, we're going to see where that ceiling really starts to lift as stocks have corrected about 15%, I think, from their all-time highs. Okay, and I think that's going to force gold's price up to about 2,200 as it trades in between its floor and its ceiling. The Fed during this time is not going to slow down their money printing. They're not going to start tapering their asset purchases yet. I believe that they are going to still hold the narrative that these are transitory supply bottlenecks, but now we're going to start seeing a lifting up of the gold price and probably a little bit lifting up in the interest rates, okay? So, and I think that's all going to be very bullish for gold. Then in the next couple of years, we're just going to see gold sort of just coast upward. It's going to be a strong gold bull market, right? But we're not going to see these explosive returns, although this is going to be a huge return. So as gold turns from, say, $2,200 an ounce by the end of 2021, okay? By the end of, say, 2024, gold's going to reach a peak, I think, of around $3,400, $3,500 an ounce. So this model has it about $3,400. It's going to be trading in between the ceiling and floor again. But the reason why this is going to be is because the ceiling is going to level off in 2022. Well, what's causing the ceiling to level off in 2022? Well, I think the stock market is going to cease correcting at this time, and it's sort of going to start regaining some of its losses. And on top of that, the money supply at this point in 2022, I do believe the Fed will start tapering its asset purchases. So the money supply is going to start slowing down a little bit. And I do believe that the inflationary numbers are going to peak by the end of 2021. And I do think that they're going to lift up. It looks like they're heading up to about 7 to 8% price inflation. So that's going to be a huge eye-popping number, which is going to be bullish for gold. But then in the next coming months in 2022, we're going to see the inflationary numbers drop off a little bit. And I think that's going to lull people into this kind of, false sense of hope that the problems of inflationary forces are over as supply bottlenecks get released and the Fed starts slowly tapering back on its asset purchases, but it's still going to hold this narrative that inflation is transitory. They're just going to push back that transitory time frame every single time. But at this point, investors are going to be breathing a sigh of relief, but they're still going to be wary about going into the stock market. The stock market will rebuild, but we're going to see something like a 2000 scenario. So, your stock market will increase somewhat, but your gold price will still increase and acclimate as there's still worries because the price inflationary numbers are still not going down to a 2% norm. They're still going to stay elevated at, say, 4 to 5% price inflation. That's still high, and that's still going to force up the gold price, not to mention stocks were overvalued. So once the bear market takes in, there may be a slight reversal, but in the end, gold's price is going to go up. It's at this point at the end of 2024 that I think gold is going to peak. And the reason why is that we have to go to another video that I have. I'll post the links of these vids in the description so that way you can follow the story. But I believe that in the beginning of 2025, we're going to go through a massive economic recession brought on by the bursting of credit bubbles in our economy. We've built up a lot of debt, the interest rates are being forced up, and now this asset bubble is going to burst, which is going to cause a tanking in the stock market, causing this gold ceiling price to soar, but yet shockingly we're not going to see gold lift right away, okay? The reason being is because, asset prices are tanking in terms of commodities. So this will be a time when the oil prices will collapse. There'll be certain other commodity prices will collapse, and gold will go through a little bit of a crunch as banks who are struggling for liquidity will sell off some of their hard asset reserves just to get cash at this time. This is a banking crisis. So it's ironic here that gold's ceiling price will lift, yet gold is just going to kind of be lackluster here. After this point is going to make it or break it for gold. One of two things is going to happen, and I did not chart this out because I really don't know which one's going to happen. I have my own suspicions, but it's going to be one of two things. Either A, the Federal Reserve steps in, just like it did in 2008, pumps massive amounts of money, creates huge amounts of debts, and we're going to have soaring debts and monetary inflation, and then that's going to exacerbate fears of further consumer price inflation after we get the temporary dip in 2025. And in that case, gold will soar. Or there will be a transition of federal leadership where Jerome Powell is left. He's out of office, and whoever the new Fed chairperson is, whoever the new leader of the Federal Reserve is, will be more like a Paul Volcker and recognize that inflation is the great threat and it must be tamed right here, right now. I don't think that's going to happen. I think it's going to be the former because we're going to be in the middle of a banking crisis. Banks are going to say, if you don't give us money, we're going to close down shop. Depositors won't even be able to get their cash. It's going to be craziness. Wall Street's going to be begging, and everybody's pension funds are tied to Wall Street investments. Nobody has any money in savings, so everybody's retirement is at stake. So I believe we're going to see massive bailouts, and it's going to cause rising price inflation. There'll be a bearishness on the stock market. There may be a resurgence in the stock market, but no matter what, we're still going to get those rising prices, and gold will soar from this. And that's when we're going to see gold start to really approach in the next 5 years more closer to its ceiling price, as that ceiling price starts lifting to astronomical amounts. I mean, guys, at the end of the day, if this transpires, we could easily see gold soar over $10,000 an ounce. It's just astronomical, and right now I can't even fathom it, which is why I'm not placing that on this forecast, because there's too many what ifs, right? You know, first off, we've got to have the what if that I'm right in forecasting that the credit bubble is going to burst in 2025. There's no guarantee I'm going to be right on that. We have to, and to do that, we got to make sure that we have rising interest rates going on before that. Well, interest rates have defied the norm. Maybe they don't rise as much as I think that they will, and it still manages to keep the economy tame. And, you know, then there's the inflationary forces and everything, you know, so there's a lot of what if factors that go into this that I honestly don't know. What I do know is that gold is going to press up, and wherever its floor is, the floor price is showing here that by the end of 2025, based off of just money supply increases alone, we're looking at a minimum gold price of $2,300 an ounce. Gold will never go below that ever again. I don't think so. I don't think it will drop. It never has. Anytime I've established this floor, you can look this up back in history. Gold has never traded below this floor price, okay? So we can go all the way back to the 1970s until we were on a forced gold standard, right, where gold's price was held artificially low, okay? Gold has never traded below that floor price ever since then, okay? Ever since it started coming off that gold standard and the price started correcting upward, okay? So in all honesty, I just don't think that's going to happen. So this is assuming that the money supply flatlines in 2025 because of, a bursting of credit, which leads to a drop in liquidity. After that, this floor price will lift up astronomically as the Fed is forced in to print excessive amounts of money. And I don't think the consumer price inflation problems that we're seeing are going to be over at this time. I expect that price inflation will still be chugging along at 4 to 5%, depending on what the Fed does between now and then, until this crash. And then when the Fed starts pumping in massive amounts of money, I can easily see price inflation taking off after going through a temporary dip, which is just going to force that gold price up. So that's my forecast that I'm showing you right now. Again, this is all speculative, but I did want to give you that kind of outlook, at least to the end of 2021. I am very confident that we're going to see a jump in gold. Okay, I may be a little bit bullish in this call for $2,200 now. It's maybe gold ends around 2,000, but I honestly do think that gold's been held down to this 1,800, and that's not going to last for long. Okay, it's just not going to last for long. If you look at it, it dropped in March to a bottom out of 1,700. It pushed up a little bit slightly, and it's up now a little bit more, and I expect that to jump when stocks are dropping and investors are forced to acknowledge that this inflation is not so transitory. Once you start seeing 6% year-over-year inflation, 7% year-over-year inflation, 8% year-over-year inflation, I think all bets are off, and we're going to see a really strong gold push that's going to last into the better part of 2022 and 2023, as even though it may drop off, it's still going to remain elevated, okay? Guys, thank you for watching this video. If you like the content that I'm producing, make sure you just hit that like button, show me support, and then subscribe to my channel if you want to see future content and get updates on future vids that I produce out. My next one is probably going to go over the silver price. I've been ignoring silver for a long time. There's a very big reason for that. My next video is going to go over that. So, I'm going to probably release a couple of videos on silver. One is talking about silver's value compared to gold, and then, create a silver forecast, so to say, that's going to be a little bit more interesting than gold. It's very wonky, but it's potentially more lucrative. So you need to stay tuned for that. You definitely don't want to miss that, okay? So until then, I'll talk to you next time.